Good morning, ladies and gentlemen. Welcome to the webinar in the theme Environmental Finance and Market for Natural Capital. And we have our speaker here, Dr. Karel Knowles. He's the visiting professor at JGSEE, and he's also the director of Eton Consulting from Australia. He has spent 1 week at the Joint Graduate School of Energy and Environment, King Mongkut University of Technology, Thonburi, and now he already returned to Australia. But when he was at the JGSEE last month, he gave a series of lectures, and one of them is on this theme. And last week, he gave one public lecture under the theme on the TNFD. And this week, he's gonna explain more about the biodiversity and about the carbon credits. And you will learn more about the case studies, about some market examples. And so before we ask Dr. Karel Knowles to present, I would like to say a little bit about housekeeping. Please mute your microphone during the webinar, and there'll be the Q&A session. After the presentation, you can type in the chat box, or you can raise your hand. So I will ask you to turn on your microphone and ask a question. But if you have any pressing questions you want to ask during the presentation, I'm sure that our speaker will be happy to answer your question. And this webinar will be recorded, so I'll just inform you. And the record will be posted on the JGSEE Facebook. And in the near future, it will be on YouTube as well. Now we just need some time to arrange it. And Kun Gulakan will send you the email with all the links for the record. So it will be easy for you to find the past record. Okay, so without much further ado, so I would like to give the floor to Dr. Karel Knowles. So, Karel, please.
Yeah, and good morning, everybody. Thank you, Kun Sunara, and Sawadee Krap to all our audience members. So, as mentioned, today is the last lecture in a series of 5 lectures that we've done at the JGSEE. It's intended to be a bit of a survey of the field of environmental finance, and so today's lecture is trying to wrap up some of the things that we've discussed previously and provide some specific examples with some links and some numbers, and we can discuss what those case studies tell us. So a couple of little notes as we go. I will endeavour to share up my screen. And I'm hoping that you can all now see my presentation. So if that's not the case, I have something to let me know. So yes, here we are at the end. The presentations were intended to all sort of interact with each other. And so if you've missed some of the previous ones, well, obviously they are fantastic lectures, one and all. And as mentioned, they will be available on the Centre's Facebook page. But today's one, this last lecture, is around market examples. And the question arises, well, who am I? So again, if you've not been to the previous ones, let me just briefly introduce myself. If you have, hopefully I say the same thing as I have previously. So my background in environmental finance goes back quite some years. I actually commenced working in this space back in about 1992. So almost, in fact, slightly over 30 years now, when I was involved in an early attempt to set up a carbon fund in Australia, an attempt which failed, and we lost our money. So I had a very early experience about how easy it is to lose money in carbon markets. After that, I worked for the Australian Financial Markets Association, where I did a lot of development around data services and documentation in energy and enviro markets. I became an academic, and for a number of years was one of the founding directors of the University of New South Wales Centre for Energy and Environmental Markets. And I was then approached to move out of academia and into investment banking. So I was one of the founding directors in Macquarie Bank and Macquarie Capital's climate change team for about 8 years. And in that capacity, undertook a great many transactions related to carbon markets and environmental markets and renewable energy and such, including being seconded from Macquarie to be the CEO of a brokerage business. So I have actually traded or acted as the CEO of a brokerage for trading these sorts of things. That's all the past. Who am I today? As Kunsenrat mentioned, I'm a visiting professor with the centre, and I have been since 2019, so that's 4 years now. We've tried to come up to Thailand at least once a year to run some events and do some public lectures with the centre. I'd like to hope we will continue doing that. So insofar as you have an interest around this space, please do flag that with Kunsenrat or to myself, and we'll make sure that you get invited to other events as we organise them. When I am not coming to Thailand and doing things with the centre, as Kunsenrat mentioned, I'm a founder and director of Aton Consulting. So that's a small team, 4 of us who are all also PhD and former academic types. We do a range of consulting work around policy on environmental markets and strategy. So among other things, we are currently working with the New South Wales Department of Environment on some policy questions around the development of particularly blue carbon markets. We'll discuss a couple of blue carbon examples in a moment. And we're also doing a major piece of work for the Australian Grains Research and Development Corporation regarding where the opportunities for the grains industry are in Australia coming out of these markets. Obviously, grains are a major export industry for Australia, and so that throws up a lot of interesting questions about how exporters have to deal with the rise of carbon markets. And I know that there's certainly interest in a Thai context about how, for example, rice exporters may be exposed over time. So we're currently doing that sort of work. I'm also a co-founder of Skander Partners. Skander Partners is a small biodiversity and carbon investment management business. We're just standing that business up at the moment with our first significant investors coming on board. Basically, there we look at investing into various sorts of projects that are in this space, and then seeking to trade the output from them. So I guess it's in terms of summary, I have a mix of academia and investment banking and hands-on experience of putting both my own money and other people's money on the line in this space. So I perhaps bring a slightly different perspective than many you may have previously encountered. Let's get into it. So here is my summary of everything you need to know about environmental finance in a page. And during the last 5 lectures, we have discussed every single one of these dot points to some extent. Today, we're going to focus on the 4 dot points that I've put in red. So really, we're revisiting the very summary discussion that we had about those dot points in previous lectures. And yes, if there are things on that page that you don't recognise, then as Kunsenrath has said, the previous lectures are all recorded, and feel free to go back and take a look at them. Okay, so first off, let's discuss, when we talk about these markets, let's discuss what we actually mean. So there are two broad flavours of market here. There's mandatory markets, so markets that have got some form of government backing or government regulation behind them. And there are voluntary markets, and there are both mandatory and voluntary markets for both carbon and for biodiversity. So we're going to do a little sort of sweep through the nature and scope of some of those markets in a moment. But I thought this graph, or sorry, this diagram from the World Bank, from the carbon pricing dashboard, was actually an interesting one. In the years that I've worked in this field, the general trend has been towards the development of ever larger and ever more sophisticated carbon markets and environmental markets more generally. And I think that's evidenced here from this. You can see now that markets, official government markets of some sort, actually cover a significant fraction of the world's population, and certainly many of the wealthier countries and the larger economies have got these schemes coming into place. So this is no longer a marginal sort of market that only amateurs and enthusiasts are in. It is very much in the mainstream. And I would comment to that, when I joined Macquarie Bank back in 2007, it was considered quite innovative for us to seek to invest $50 million into a solar farm. That was considered a large renewables transaction. Of course, these days, no one, a deal that small would not be considered a serious deal for an investment banking team. You now routinely see renewables deals that are measured in the multiple hundreds of millions, if not billions. And that's, again, a sign of the level of growth and sophistication that's occurred. Biodiversity, there's a smaller number of government-backed schemes, and there are also voluntary standards, and we'll get into discussing those in detail in a moment. But the comment I'd make is that they are less comprehensive and less sophisticated, and I think that reflects two things. One is the inherent complexity of biodiversity as a tradable asset class. Unlike carbon, where you have a single unit, 1 tonne of carbon, and 1 tonne of carbon emitted anywhere on Earth is equivalent, at least in terms of the underlying physics, underlying climate change. In the case of biodiversity, it's a much more sophisticated or a much more complicated problem. Protecting koalas in Australia is not the same thing as protecting pandas in China. So somehow one has to work out metrics that somehow bring some level of standardisation between these. But I'll put that one up just to show that we're now talking a significant number of mandatory markets of one sort or another around the world. The voluntary markets, so this is where people have used a voluntary standard to create carbon credits and to sell them to often a corporate buyer purely on a voluntary basis. This graph is showing an extract of the VERA registries, showing in particular agriculture-based projects, which are the bulk of projects that have been generating credits in these schemes to this point, and their location around the world. And again, you can see that there's a wide range of locations where voluntary projects have occurred. I don't think that this mapping is entirely complete, I have to say, but even in its partial form, it's certainly widespread. So those that are interested, the underlying data for that is from the VERA database, and I give a reference to that in a moment. So in terms of the voluntary market side, there's a set of different standard companies that are out there. Verified Carbon Standard, VCS by Vera, is, in my experience, probably the most widely recognised one. Gold Standard is not far behind it. The other items mentioned there tend to be more active in particular regional areas or under particular UN mandated programs. I would note there in particular the Vera Climate Community Biodiversity Standard, the CCBA. This is Vera's attempt at moving into creating instruments for voluntary biodiversity. Again, it is one of a number of initiatives in that space. So there's a lot happening there. There's a lot of different groups. And when someone says to you that they are looking to do a carbon deal or a biodiversity deal, one of the very first questions you should be asking is, well, what standard are you proposing to apply? Are you proposing to apply one of these voluntary standards? Are you proposing to apply one of the government-backed standards if your project happens to be in a part of the world where there is one? So voluntary carbon, again, there's a series of what are known as methodologies. So essentially what happens is that you look at the nature of the project you're undertaking. So I've selected some agriculture examples here, although they do have standards for certain sorts of commercial and industrial activities. But let's take the first one, the VCS Agriculture, Forestry and Other Land Use Standards. Again, it's a voluntary standard, and it provides a framework around measuring greenhouse gas reductions from agriculture and forestry projects. There's a whole series of these, so we'll actually take a look at in some detail at one. So this is just an extract from the Vera website of some of the voluntary carbon methodologies as they relate, again, specifically to agriculture. No particular reason why it's for agriculture, but I selected that as an example case study. So you can see there's a series of methodologies that relate to very specific activities that are undertaken on the land. So again, one can see that the two big ones that have been particularly actively used, VM0042, which is around reduction of tillage on improved land management. So we're talking reduced tillage, reduced fertiliser application, management of biomass residue. So this is when, let's say, a crop has been taken, do they proceed to burn the stubble, or do they do something with the stubble to let it reintegrate into the soil carbon? It's all these sorts of things. That's been, to this point, the single most popular form of activity that's occurring in the ag sector. But you can see that there's a series of other methodologies that are approved, and we've noted out there the ones around use of biochar and reducing food loss and waste. To my mind, these are both areas where there's significant opportunity, and I think that's reflected from the fact that people have seen fit to propose methodologies and bring them forward. To this point in time, there are no projects that I'm aware of, or certainly no projects showing in the Vera registries related to those, but I think it is an area of some potential. So certainly anyone who's online and thinking about where to do projects, taking a look at the methodologies that are available under the Vera standard, if you're looking at doing voluntary carbon credits, is not a bad place to start. Having looked at that, let's talk for a second about the money. Where does the money go? Now, I put up this slide, and I've used it in one of the earlier lectures as well. This one is based off an article in Environmental Finance magazine. So you can see I've given the link there to Environmental Finance magazine. Environmental Finance magazine is a well-known industry newspaper. It's been around for quite a long time, at least since 2006. It's quite expensive for a subscription, but it does have a great deal of useful data. They have a very good database sitting behind it, so it's actually quite a useful resource for researching things. And again, if you're sitting in a financial institution and you're serious about looking at investing in this space or trading in this space, I would strongly commend it to you to get a subscription. I have no connection to them. I'm not a shareholder, but in my experience, it's quite a useful resource. So I've pulled up here one particular article they did in February of this year, claiming that biodiversity fund assets have tripled to nearly $1 billion. Now, I looked at that headline and thought, well, I don't believe that, because I know at least 3 funds just in Australia who are all at least $500 million. So that's 1.5 billion just from the ones I know in Australia. So I thought that their analysis was probably lacking. So we've had a look at the actual list of funds there when extracted the underlying data. Now, the interesting thing on this is the definition they've used is actually funds that are undertaking activities mostly in listed equities. And I think there is actually an interesting point in here, which is the growth of biodiversity themed listed equity funds, and that's what most of the funds in that list are doing. So you can see there's some quite significant groups in there: BNP Paribas, AXA, HSBC, Fidelity. So these are big name fund managers, and it's interesting to see that they have launched just in the last year these biodiversity specifically themed funds. What are they actually doing? What they're actually doing is putting a attempt at a biodiversity screening across their equity investment selections. So for those of you that attended the lecture last week about the application of the TNFD, the Task Force for Nature-Related Financial Disclosure, you can see that the work being done in the TNFD process would be feeding into the screens that these funds are doing. So I wouldn't take it as a good number that they've said there's nearly $1 billion there. I think that is a very substantial underestimate, but it is interesting to see how many of these funds on the part of major fund managers have actually launched just in the last year. Let's pick a couple closer to home and then have a look at some of the deals that they've done. So again, I mentioned this group in a previous lecture, not just because many of their senior executives happen to be in Sydney, which is not far from where I am, and I know some of these people, but they are actually doing some quite interesting work. So a bit of coverage here: climate asset management. So this is a joint venture between HSBC and a group called Pollination Group. And the headline is they've raised $650 million US dollars to invest into nature projects. Now, I've made some notes of my own on the right there. When you speak to the guys at Climate Asset Management, they say that what they're actually looking to do is to co-optimize real assets. So what does that mean? It means going and buying something that is already in some sense operational or productive. So it might be a farm that is, let's say, a cattle farm, and you continue to run it as a cattle farm, but you do things on it that enable it to generate carbon credits, and you then optimize between the value of the production from the meat versus the value of the production from the carbon credits. So that's the investment thesis that they've put forward. Pollination, which is one half of that arm, has actually had a long history it's had some history. Pollination only got created about 3 years ago, but has had some history in doing project development. Certainly the individuals involved have been involved in doing project development for many years. And one of these is in fact, the world's largest Pakistani blue carbon project. So we're just going to take a look at this particular project as an example of them. So this is by far the largest blue carbon project. So blue carbon is simply a phrase for carbon emission reductions that are achieved in the ocean environment. The most common form of those at the moment is to do with the protection of mangroves and wetlands, and that's certainly the case for this one. So let's take a look at what it says. It says across 2 phases aims to restore. So, and the reason I emphasise that, many of the methodologies have what's known as an additionality test. So that is to say that you need to show that you are somehow improving the thing that you're seeking to get credits from. You can't just say, well, we're protecting it and keeping it in its same status. You have to do something to make it better. So, Blue Carbon Project aims to restore over 300,000 hectares, so it's a large project, of degraded mangroves on the southeast coast of Pakistan. Now, you might wonder why mangrove projects, and the reason is because it turns out that mangroves actually sequester a great deal of carbon. In terms of the carbon impact per hectare, it's actually one of the higher things you can do. You can routinely see in the order of 30, 40, sometimes above 40 tonnes per hectare being sequestered, and that beats even a good tree plantation in a high rainfall area by about a factor of 3. So insofar as you can make these projects work, they can work quite well. So this one, replanting, project will rehabilitate and restore degraded lands through natural regeneration alongside active replanting. So they're putting thousands of people out into the fields or into the coastal area to actually replant mangroves, and then there's a great deal of monitoring and evaluation that goes on. And you'll notice here, if we look at the validation, it's being done under that new biodiversity standard that's been issued by Vera. So the validation there is that CCBS from Vera. They claimed from that Carbon Market Institute link that I've given there to have issued 3.15 million credits off that. So if you assume a number of sitting around $20 a tonne per credit, you're talking $60 million plus in terms of the immediate value of the credits that are currently on issue. They're claiming that they're aiming to deliver 250 million blue carbon credits over a 60-year lifetime. Rather amusingly, on the Carbon Market Institute site, they said that the buyers are commercial in confidence, but they're not terribly in confidence because they're all publicly listed on the Vera registry. So we went onto the Vera registry and pulled a list, and you can see the names of the sorts of groups that are buying credits at this point. You'll notice there that some major technology companies and other major industrial groups are sitting on the registry as it stands. So interesting to see the sorts of groups that are purchasing these credits. Our estimate of the last sale value there was at slightly under $28 US a credit. That's actually a pretty good price. That would suggest that they received something of a price uplift for the perceived social impact of the project and biodiversity impact of the project. So this would be what we refer to as a carbon plus kind of project, where you're not only getting the carbon credit, but you're getting some other positive impact from the project. Now, what's the relevance here? Why did I choose out of all these examples? Why did I choose to show this one? A couple of reasons. Firstly, it's one of the largest blue carbon projects that's been implemented in recent years. We'll show in a moment where some of the others are that are coming up. Also, because I noted in one of our previous lectures that Bank of Ayodhya has just recently done a $400 million blue carbon issuance underwritten by International Finance Corporation, which is part of the World Bank. Now, I know nothing about that project apart from what is, or from about that issuance apart from what is publicly on the website, but one would presume that it is projects like this and things that have a similar impact in those coastal and coastal regions that are the sorts of things that they are looking at. Here's another example, a somewhat smaller one. This one was 11,000 hectares. I put this example up as one to look at where it didn't all go quite as well. The thing to note on this one is that when you look into the registries and attempt to back engineer the project, the impact report, which is a public document for it, it notes that it does look as if they are not in fact going to secure enough money to have fully covered the cost on the project. Now, there's a bit of a data issue there because the report isn't complete, but that would appear to be the case. So I guess I put that one up as an example of a project that's gone the other way, where the costs of establishing the project and setting up the monitoring and verification processes with the project have actually been higher than were originally anticipated. So before you think this is an easy section, area to work in, it's easy to make money, well, actually there are many projects that for one reason or another have not proceeded to be fully successful. So I'll point you at that one as an example. And a quick look, again, just from looking at the blue carbon projects, where we're seeing those launching around the world. Again, some of these are quite substantial projects, and there's a reasonably good distribution of them. You'll see a number of significant projects launching in Southeast Asia. A number of those, I understand them to be coming out of the Indonesian reefs project, which is a major project being funded by the World Bank. But I provided the link there for those that want to drill into where these sorts of projects are occurring and the nature of what they're doing. The other thing I'd note there is that the green circles are mangrove projects, and you can see that almost everything that's currently being done is a mangrove project. There's a couple of proposed seagrass projects. Let's take a look at a different approach. So this is an Australian example, a group known as Kilter Rural. Kilter Rural have been around since about 2013. So they're quite experienced in the sector. And I've given here a clipping from the Australian Financial Review. Again, one of the signs of the growth and maturity in this space is that you're now seeing sort of articles about these sorts of things routinely in the financial press. So let's take a look at what they've done. Kilter Rural has launched a new $500 million sustainable agriculture fund amid a wider global push by investors into natural capital assets. So first time in this lecture we've mentioned natural capital, but we're going to discuss it a bit more. This is again one of the emerging areas, and the idea behind that is to say, look, just as we've got manufacturing capital in a business, we've also got a level of natural capital, which is the value that the natural environment brings to the enablement of all the other activities that we do. And we're actually seeing a series of natural capital funds launching at the moment. But let's take a look back to this one. So this fund, $500 million, looking to buy natural capital assets, those that combine traditional farming with carbon sequestration and biodiversity initiatives. So this again, like we saw on the previous slide with climate asset management, it's a real asset fund. They're looking at buying tangible assets that are operational in some way, and where they can co-optimize between the production of carbon and the production of biodiversity. So moving down through, initial $65 million to fund 7,000 hectares of cropping. So they're buying an operational cropping farm. Doesn't say exactly what the crop is. Water assets, 3 farms and associated water assets to seed the new fund. So that's referring to the fact that at least in Australia, agricultural water is a tradable right in its own class. So you can actually own water certificates as an asset class. So that's what they're referring to there. And the assets are expected to generate annual income returns of 4 to 5% per annum and total returns of 10 to 12%. Now let's hone in on that for a second. Annual income returns of 4 to 5%, noting that the inflation rate in Australia is currently at about 6%. So what they're really saying is that they're making a essentially zero or perhaps slightly negative real return on the actual production income on the farm. Now that might strike you as rather surprising, but it's actually not that surprising. The average return on an income basis on Australian farmland is sitting at about 2% real. And you know, that's hardly, you think that's not a particularly compelling investment, and you'd be right. Where they're getting uplift is in respect of the total returns that I've mentioned there at the 10 to 12% number, and that's from the assumptions they're making about the value of the carbon and other enviro instrument assets that they're getting there. So let's take a look down to what they're actually planning on doing. Kilter Rural plans to reforest 30% of the land it acquires to generate carbon credit units while also generating income from growing canola, wheat, fava beans, barley and corn. Okay, so 30% of the land is being taken out of production. So it is currently presumably marginal productive land that has got some areas of high productivity value. They're keeping the high productivity bits and they're taking the low productivity bits, and they're saying we make more money out of generating carbon credits by stopping the farming and allowing that land to regenerate to become something that looks like native bush. So I think there's an interesting point to note in there, right? At current carbon credit prices in the Australian market, it can be worth taking productive land out of production. Let's say that again. It can be worth to take productive farmland out of production for the value of the carbon credits that you're currently getting. Few comments in there about the sort of investors they're getting. So they mentioned there that traditionally they've been getting most of their money from family offices and high net wealth individuals. So that's large private investors. I do note that subsequent to this article, they have actually had a number of investments made by major superannuation funds. So it's interesting to see the super funds moving into that space too. Now, I'd like you to sort of try and hold that example or that fund in mind in a moment. And you might, because I'm going to shortly show an example of a particular biodiversity deal that relates to taking farmland out of production, and you'll see why it is that that investors have moved into that space. Now, I might just stop there and quickly inquire. I can't see if there's any comments in the chat or any questions, but I'll just quickly check. Have we got have we got any questions up?
No, we don't have the question on the chat box.
Okay. Well, if there are no questions, I will keep on going. All right, let's again just take a look from that example from Kilter. What sorts of things do they have available that they may well be doing? So again, this is an analysis we've done looking at existing projects under the Australian mandatory carbon credit standard. So this is producing what are known as ACCUs, Australian Carbon Credit Units. This is the Australian government set up scheme. You'll notice that there's a lot of stuff happening there around management of animals, so beef herd management, effluent management, so that's management of runoff from stocking, cattle's feedlots and such, piggeries management, and then despite the fact there's quite a number of projects on fertiliser management and pasture management, they actually haven't proceeded to generating and selling credits yet. Now that reflects, again, a question of maturity and development. Some of these methodologies have only recently been developed and approved. So you'd expect to see that those sorts of projects coming around, fertiliser, etc., are in fact going to start appearing in the registries. The other interesting point about that is that to this point, the focus has really been around things that involve management of livestock, but stuff that is doable on the large parts of Australia that are under cropping for some reason, I think are going to be a growth area. So that's why we pulled this one out. We're about to go into doing a couple of case studies specifically about biodiversity credits, but let me just talk about what we mean by that and why this is an important space. So the big development in this space was the Montreal meeting conference parties under the UN Biodiversity. What's its full name? The Convention on the Protection of Biological Diversity. So there's a conference of parties under that convention every couple of years. COP15 was held in Montreal in December and actually achieved a couple of fairly significant developments. So Thailand was actually, of course, represented at that conference. I'm not sure exactly which of the outcomes from that conference are being proposed by the Thai government for being pursued, but certainly in the case of Australia, the US and EU, all the major targets have been ratified, and along with, there are many very significant targets set in that protocol, but one of them is an explicit target to have 30% of land and sea under some form of conservation by 2030. Now, in the Australian context, that's a very significant commitment. Let's put that in a bit of context. By my reckoning, that would imply about a 3 times increase in the total level of conservation activity in Australia. Now, I admit that that's a little bit contentious. You do see some numbers being put around. That something like 20% of Australia is already under some sort of conservation. I don't personally buy that, but I can see how they're making that argument. My view would be that in reality, it's probably talking a 3 times increase in conservation activity. We note that national parks currently cover 8% of Australia. 55% of Australia is under some kind of private ownership. So if you're going to get to a 30% target under conservation, some significant fraction of land that is currently privately owned is going to have to move into conservation. As a government, you've got 2 choices. You can acquire that land and forcibly put it under conservation, or you can pay people enough money that they voluntarily choose to put it under conservation. I think it's fairly clear, at least in the Australian context, that there is no appetite on the part of government to do this forcibly, because it would be very contentious. So what we're really talking here is that the biodiversity markets that are being proposed, where legislation in the Australian case has already been released, are going to be required to actually move probably in the order of 5 to 10% of the privately held land in Australia into some sort of conservation. Now, if that's the assumption you make, and you then make some assumptions about the likely pricing of those, what it says to me when I do those calculations is that biodiversity markets, at least in the Australian context, and I think probably globally, are likely to be significantly larger than carbon markets by 2030. So you heard it here first. Markets that you may well have never heard of are going to grow very rapidly. And that's reflecting the fact that we're seeing all of these funds wanting to invest into these areas. Now, specifically here, I note that Australia and the United States have signed a memorandum between them to coordinate their policies and to seek to have a market that can be transacted across those jurisdictions. I note that a similar agreement was struck between the UK and France just a couple of weeks ago. And certainly there are discussions about these sorts of markets going between all the major counterparties. So again, we're seeing a big upswing in activity around these markets. In the Australian case, it all hangs out of a proposed nature repair market. Now, I haven't been able to say too much about that here because that legislation is currently held up in the Senate here in Australia, and it's not quite clear what's actually going to happen to it. But I think we can assume that there is going to be a Australia-wide biodiversity crediting market in existence imminently. It's a question, are we talking months, but maybe talking months, certainly not talking years. These things are developing. So we work to see it, but in the absence of that framework, we are seeing this growth in the voluntary standards. Okay, let's take a look at a couple of example actual deals. So this one from about 18 months ago. This one was interesting to me because it actually represented one of the largest carbon credit deals in the Australian market that year, largest single deal. So again, Australia being what it is, it's a big place. So this is a big deal. So this is to do with undertaking stocking. So this thing was a sheep farm and then a cattle farm, perhaps not the right word. So it was a cattle station, right? Sheep station and then a cattle station. It had been used as a cattle station for the last 20 years, and they have been destocking. So they've been taking the cattle off it, they've been improving the fencing, and as a result have been generating carbon credits. Now, I'll come back to some of the numbers, but let's just take a look at that particular one. This is where it is. It's right out in the middle of Western Australia. For those of you that know something about Australia, you know that that is fairly tough country. The rainfall there is, from memory, about 200 mils a year. It's not very much. Here we go, 260 millimetres a year of rainfall. So this is semi-desert by any standards. It's hot. It's a long way away from anywhere. To put this in some perspective, from the top of that map to the bottom is about the same as the complete length of Thailand. So it's a long way out of the middle of anywhere. It's not when Thais think of farmland and you think of beautiful green lush areas. This is completely not what this is. Let's take a look at it. Currently has 2,000 head of cattle. They have an agreement for 1.6 million ACCUs for over a permanent period of 25 years. So again, when you enter one of these arrangements with the government, it requires you to actually state the period for which you're going to be locking up or doing whatever it is you're doing. So this is done on a 25-year period. They've got a contract there to deliver to an Australian government scheme, I think with the Emission Reduction Fund. So they've got $3.3 million worth of that at $14.25 per ACCU, and they've got a further 1.3 million ACCUs that are uncontracted. So according to their information memorandum, the documents that they've released, and this clipping is from their documents, they estimate that to have a 25-year income of about $44 million. So the interesting thing on that is that when you go and check the property registry, that property last changed hands back in about 2017 for about, from memory, for about $4.5 million. So it's quite a strong return that's being implied from that cash flow. So again, I come back to my point. You are seeing deals these days and pricing that makes it worth taking a productive farm out of production for the purpose of creating carbon credits, at least partially out of production. So here's what I noted at the time when I looked at this deal. The 1.6 million ACCUs, 25 years, 330,000 under contract for 3.3 million. Highest offer that was indicated to be received at the time was 7.5 million. The interesting comment made to me by the agent when we were discussing this particular property, he specifically commented that this property was bought by an accountant in Perth to take advantage of the carbon market. And again, I think that says something about how these markets have evolved. These are now markets where people who are savvy with money, like accountants, will say, look, I'm actually going to buy land specifically for the purpose of doing carbon deals. Again, it's a sign of the level of development that's occurred. Information pack suggests 25-year ACCU stream could total 44 million. Now that involves making some future assumptions about the price of carbon credits, and certainly the assumptions they've made are reasonable ones. You could get those sort of numbers on reasonable assumptions. So I have to say on that one, without having run the detailed numbers myself on it, but just looking at what's been reported, it certainly feels like the return on the carbon assets for that are more attractive than planting trees, and more attractive, in fact, than continuing to run it, as a capital station. So, an interesting deal on the carbon side. Now, this one, I'm going to talk to this one. This is not a slide that, the following slide deck is not going to be circulated or provided as part of the pack. The slides that you're seeing now, they should be circulated to you probably in the chat, or certainly made available. But I'm going to stop that. I'm going to show an analysis that I did here on behalf of a client regarding a biodiversity deal that was recently in the market. And this is semi-commercial confidence. So I'm just going to stop this presentation for a second. I'm going to pull up something else. While I do that, let me check any questions in the chat there.
No, in the chat box is don't have any lecture from the chat box.
Okay, I'm sorry, that wasn't clear to me. So someone say that again, please. I'll take it was no questions and I should keep presenting. Okay, so look, I'd like to just talk through this slide deck that I prepared looking at a deal that was going through earlier in the year by a group called Syndication Sanctuaries. Now, this one was based entirely around the New South Wales Government's biodiversity scheme. So the New South Wales Government has had a biodiversity trading scheme in place since 2016. It commenced as a scheme intended to allow that if you were clearing land for property development purposes, to get biodiversity credits to offset the impact you were having there. So let's take a look at what these guys did. They went and in September of last year, they offered for sale 5 properties, in total 13,000 acres. And they said in their information memorandum that they believed that to have $200 million worth of biodiversity offset credits. Now, when I was asked to look at this, which was back in May, the property hadn't been sold. So I think you'll see why when we're working through this. It raises very profound issues around property valuation. But let's take a look at just one of those 5 properties. So this was one of them, 187 Arthur Drive. This is a snapshot from the information memorandum that they provided, and they indicated that the land was 1,190 acres and that it had $26 million worth of biodiversity credits associated with it. Now, I have to say, in my first instance, I found that a bit hard to believe, partly because when you looked at the property register, the public property register, you looked at when that property was last purchased, it was purchased in 2019 for $2 million. Okay, so purchased in 2019 for $2 million, sold or for sale in 2022, 3 years later, with supposedly $26 million worth of credits attached. So that, yeah, well, that sounds like rather a lot. Let's see how they got to that. Now, of course, they don't actually, say exactly how they've done it. They do state in their register or in their information memorandum that they had sold $3.6 million worth of BOS credits on it. Okay, so bought it in 2019 for $2 million, have already sold $3.6 million worth of credits. So they've more than cleared their purchase price plus almost doubled it in a 3-year period, and claim to have a further 26 million. So we look into that a little bit. So what do we publicly know about this property? Well, we can go and check the public registers run by the New South Wales Government on the biodiversity scheme. And looking at the map, and it's a bit hard to work out because they don't release all the details, but looking at the map and cross-checking the address, we concluded that the biodiversity region that it was sitting in is probably a region known as Wallamai, and that kind of aligns with what was available in the public registry. So we do a bit of back engineering of it. I won't bother with the details of that, but we extracted out of the registry a couple of public trades that were in there. We note that their information memorandum says that they've sold 3.6. When we look at the public registries for ecosystem types that relate to that Wallamai region, we can only find 2 trades that seemed to align with that. But they do seem, when you do the back calculation of it, they do seem to align. So the transactions we could identify there were for 915,000. When you then calculated a price per credit and multiplied that up by the number of credits that they claim in the information memorandum, you do indeed get the 27 million that they reference. So what it would appear that they've done is that they have sold publicly 915,000 of credits. They've sold privately a further $2.7 million worth of credits, and we don't know who that's to, but it's probably to a group called the Biodiversity Conservation Trust. And then they've taken that price and multiplied it by the remaining credits that they hold, and they've got this $27 million number. Now that's a really interesting approach. Now, so here's my version of that calculation. So I say, well, look, if you look at the number of credits that it appears that they own, we get an implied valuation there of around 25 million, but that assumes that given you've sold this many credits at that price, that you can then sell this many credits at the same price. And those of us that have worked in markets know that if you sell a little bit of something, you normally get a bigger price, a higher price than if you attempt to sell a lot of it. When you attempt to sell a lot of it, you often find you crash the market price. But the price that they're quoting makes exactly that assumption. So I think it raises, as we discussed in our previous lecture, one of the biggest problems that we're facing in this space is around how you actually apply carbon credits and other environmental credits into questions of property valuation, because in this case, there simply isn't enough public data available to really make a firm estimate about what the valuation that applies are in. So you can imagine in this case that there is an accountant somewhere who has been asked to do an independent valuation report. The vendor is saying this thing's worth 26 million. The buyer is saying, well, it's not, it's probably worth 5 million. Someone needs to come to a view between these things, and the data sets simply aren't there. But whatever the answer is, and here's the key point that I want to make in this lecture, whatever the answer is, the value that's sitting on the biodiversity credits is already larger than the underlying land value when this property was sold as a working farm. Let's say that again. Whatever the value here is, it is clearly larger than the value of that property as a working farm. And so you can see pretty clearly on this example why it was worth taking that farm, which had been running cattle, taking the cattle off it, putting the fences in, replanting the trees, and then generating and selling the biodiversity credits of it. It's a much better return. In this particular case, whatever it is, it's probably in the order of a 50 to 75% per annum return over the 4 years they've owned that property. It's a much, much better return than the 1 to 2% real return that we were seeing from operational farms that we discussed earlier in the lecture. So I put that one forward as a specific example of why it is that we're seeing so many biodiversity and carbon funds being launched with returns like that. It makes clearly a lot of sense. Okay, I'll stop there and just quickly check any questions on that, because I've just put up some fairly, frankly, mind-blowing numbers. Does anyone want to discuss any of them?
Hi, Carl. This is Sunirat. I have a question. From this example, as well as your previous example about the blue carbon, the one that didn't go well.
Yes.
I just want to ask, because I just want to know the reasons for that, whether it's come from the same reason, that the kind of methodology or the register that they use that is like not good or something. Or it's just purely for your last example, it's just purely how the company or the developer just try to raise the price.
Okay, so let's take the last part of that first. That case of the property in New South Wales that was bought in 2019 and used under the New South Wales Biodiversity Scheme. So that example is using a mandatory scheme for biodiversity credits that exists in New South Wales. Now, there's many problems with that scheme. Those that I see actually on the attendees list are a couple of former colleagues of mine. They know that I am a long-time critic of some of the ways that scheme works. It's got some profound problems with it. But one of the strengths of it is that it has a government-backed registry and a government-backed process. So when you get the credit, it is indeed a high-quality credit from the point of environmental impact. Okay, so the sorts of concerns that you hear people mention about, are we sure that these environmental impacts are actually being achieved? Are we dealing with greenwashing? Is this real? In the case of that New South Wales scheme, or that New South Wales deal, because they are able to rely upon a government-backed scheme, all of those sorts of questions could be put to one side. So those, given the government backing of the scheme, it was always going to get a higher price than you might see on a voluntary carbon deal that's being done out of, in that case, Pakistan. There's item one is around the amount of existing government infrastructure versus voluntary infrastructure. The other thing there was that particular deal. They were very clever. Okay, let's be straight. They were very clever. They identified this issue early. Let me just pull that slide deck up again. So they identified that there was going to be a shortfall in this market 4 years ago. So they did their homework. They looked at it, but they also went and found a particular piece of land. So what we've got here, the red dot is showing where that property is. You'll notice it sits right next to, and in fact is fully surrounded by, National Park. Let me just get my annotation tool out here. Where's that? Circle. Okay, so there's the property there. Here's Wallamai National Park. Here is Yengo National park. So the property sits right on the boundary of 2 national parks. So from a biodiversity perspective, that makes it particularly valuable, because if you buy that piece of land and you put it into conservation, then this area here becomes, in effect, part of the national park, and it becomes a joining feature between 2 otherwise unjoined things. So that made it particularly valuable. So they happen to have identified a farm that just happens to be in just the right place. I don't expect to see too many deals like this one go through. This one was astoundingly, well priced, high priced. Partly, I think, the fact that it was an early deal, partly the fact that it was in that very special location. But it is nonetheless a good example of how working farms can be turned around. The example I gave before of the just clear that and bring back up the other page. The example I gave before of the mangrove deal. Let's see if we can find that.
Yeah, the one that didn't worth
Yeah,
the register fee.
Okay, so that was this one. Last one,
Yeah.
I've still got annotations there, clear. Okay, so that was this one. Now, again, there's not a lot of detail available on the public registers about what exactly has occurred here, but it has been done under that voluntary carbon standard. It's a mangrove deal, and as we've seen a series of those, but it was one of the earlier mangrove deals. Now, mangroves, as I'm sure you're aware, are not a terribly pleasant environment to have to work in. It's always muddy and difficult, and so the verification and planting processes, when they mentioned in that that Pakistan deal that they were replanting mangroves, think for a moment about what that actually involves. It involves people standing out in the mud in that area, physically planting, mangroves. It's slow, it's dirty, and by definition, it's therefore expensive. So you need to have a very well done project plan to successfully do that and still make a profit off it. It's just inherently more difficult. In that case of the one in New South Wales, all they had to do was take the cattle off it and plant some trees, which is obviously a much easier task. So again, I think the point I'd make out of this is that there's a very wide range of deals that are being done. And when people say that we're investing into a carbon project, there's a series of detailed questions there about, well, what's the standard under? What sort of project is it? Is it a blue carbon project? Is it a agriculture project? Is it a avoided emissions in an industrial facility project? There's a heap of those sort of projects. And then needing to understand in detail what exactly that project's doing and how it's seeking to achieve it. And I think that's one of the core lessons out of this whole series of lectures, is that actually there's a lot of detail that one needs to understand to be able to sensibly estimate how these projects are going to work.
Okay, thank you. Yeah.
Sorry, you know that I tend to give long answers to your questions.
Mm-hmm. Yes, this is something that we are also a bit aware of as well, because there were many questions on the agricultural land that are likely to be converted into the land for properties like condominium or something, which can make more profit.
Yes,
but sometimes we would like to preserve the land for some the fruits or which has the geological identity or something, geographical identity. Yeah.
So the earlier in the slide deck, I provided the VERA methodologies that relate to land use and land use change. And they are most likely the methodologies that would apply in a circumstance like that. So you can work from that to see, well, what are the price of the credits that you can generate from doing that. But remember also that the point about there needing to be some form of additionality. So one needs to say, look, I'm not just keeping something, I'm actually in some way bringing something new on. So one of the common issues at play here is that in a circumstance like that, where you're saying, well, I'm actually going to take an existing orchard, which is an agricultural production already, and I'm going to clear it to build a block of condos. It's not obvious that you can actually provide the alternative by way of selling credits. If you were saying, I'm going to take that orchard and turn it into a jungle, then that does generate credits. So one of the things at play here is that it is essentially mandating some form of change, whether the change is making money out of providing conservation actions, or the change is making money out of building condos.
Okay. Yeah.
Okay, so on to my last 4 or 5 slides. I put this one up really just to put a bit of perspective about some of the numbers here. So we mentioned that for that property that had sold credits under the New South Wales Biodiversity Offset Scheme. So note there that they had gone to market saying, we've got $200 million worth of credits on this property. When you actually look at the register of transactions in that market, the total market turnover in 21-22 was around $100 million. That's the public trades. There'd be a series of private trades that were done, which were probably another 50 to 100 million. So let's call it 200 million. Essentially what you had there was one property that had like the entire year's turnover that was being claimed. So again, this throws up these big questions around valuation. How do you value large transactions that by their very nature are going to depress prices in that market? And it's by no means a resolved question. Right? There's huge methodological issues which banks and market participants are having to try and get their head around. The ACCU market, so this is the mandatory market in Australia for the government-backed carbon credits. So these are the ones that were being used in that property in Western Australia that I mentioned. So again, total turnover there outside of the emission reduction fund, and that's a big thing because the emission reduction fund is actually a multi-billion-dollar fund in its own right. But the publicly transacted ACCU trades, again, in 21-22 was around $200 billion. So again, we had in the case that I put up of that property in Western Australia, where they had estimated reasonably sensibly the portfolio of credits at about $44 million. That is in and of itself 20% of the entire market turnover. So again, it throws up these same valuation issues. I put that in comparison to the LGC market. So this is the renewable energy market in Australia. Turnover that year, again, was probably around $1.5 billion. So again, the comment that I make is that biodiversity markets are less developed than carbon markets, which are less developed than renewable energy markets, but they're all growing in one way or another. And again, harking back to the previous lectures, which were around the overall field of environmental finance, the rise of green bonds and such, I just note there, again, to put those numbers in some context, that green bond issuances just in Australia in 2022, and that was year to date, so I did this analysis from memory towards the end of 22, was about $5 billion. So we estimated it to be $6 billion for the full year. So you can see the turnover, again, the green bond issuance is, again, multiple times the size of the underlying markets that they're looking to invest into projects that are related to. And how does that compare globally? Well, global green bond issuances estimated to be in the order of 850 billion. That was Aussie. So again, a very large step up in scale. So there are some quite large numbers there, but the key point that I'd sort of like to take back is that, or people to take, is that these markets are developing very quickly, that we've seen a lot of work done on the voluntary markets. We're seeing a lot of development occurring of government-backed and mandatory markets around the world. And I come back to, I guess, my final point from before, that my view is that these biodiversity markets are going to be bigger than the carbon markets within the next few years. 2030 is my prediction. Might be a year or two after that, but it's certainly, in my view, coming. I make a comment here about a couple of other groups that have been out there talking about things. So both sides of this one, right? So 2023, 22-23, we've seen a lot of these new funds launch. So we saw climate asset management that we discussed. We saw Kilter Rural that we discussed. But there's been a lot of others who have also been raising money. Some of them have been having trouble trying to work out how to actually deploy the money. And that's a classic problem, isn't it? You say to investors, I can invest your money into X and make you a return, and they give you the money, and then of course you actually have to do it. And that's the problem that our colleague here on the right, I don't know this guy, but that's the problem that the Jupiter Green Investment Trust is clearly striking. And I'll put up a clip there from a newspaper article about John Wallace, portfolio manager of London-listed Jupiter Green Investment, says we can't invest the money that we've got. It's a nice problem to have in a way. The other clip there is on the other side of it, and oddly enough, from May of 2022. Veteran fund manager has tipped Australian carbon units to surge to $100 a unit, $100 US a unit. Packhorse Pastoral acquired a further property. Now, Packhorse Pastoral has subsequently had some issues, but they did indeed succeed in raising quite a lot of money to invest into doing, again, this real asset optimization kind of strategy. So again, I guess the point that I make there is we're certainly seeing money being deployed, albeit that sometimes people seem to struggle to find sensible things to invest into. My other comment, just in terms of deals that we're seeing going through, is that platform plays appear to have been going very well. So I mentioned here one particular one that, again, that I have no equity involvement with, although I am doing some work with the guys at Expansive. So this is a group, a platform trading, essentially an exchange platform. And they managed to raise $400 million in 2022, and they've subsequently raised another couple of $100 million to fund the growth of that business. And it's essentially an exchange and trading platform. So again, to harken back to the old thing about when there's a gold rush going on, the people that make money are the shops that sell picks and shovels to the gold miners. Often the gold miners don't make money, but the shops selling all the gear and equipment always seem to. This is a similar kind of thing. We're seeing quite a lot of money going into the services and platforms area. We've also seen a series of deals go through, private equity deals where they're buying consulting businesses that work in this space. So look, my last slide. This is really just some personal view from me and what's happening in these markets. Where are they going? Look, for me, biodiversity markets feel a lot like like 2007 was in carbon markets, which is to say, people have heard of them. People don't quite know what to do with them. There's a sense that something's going to happen, but it's all a bit immature. It's all a bit badly defined. And as we saw in carbon markets, that then went through a process over the next 10 or 15 years of becoming more sophisticated, better regulated, government backing, government registers, etc. I'm expecting to see the same thing on biodiversity. And as I said, if you take biodiversity markets where they are now, and you assume a similar growth trajectory to what we've seen in carbon, you rapidly get to some very large numbers. So, personal comment from me, I think we're going to see a lot of action in that space. The groups that have raised money, some of them are struggling to deploy it. I think climate asset management is struggling a bit that way. I think some of these funds are groups that are trying to do things outside the ag space in particular. The ones that are doing agriculture-based deals seem to be finding more things to immediately invest into. That will change. The other one I'd note is around these funds. So we noted there a table with the biodiversity themed funds and how we had all these big groups that were now doing listed screens over biodiversity funds or ESG screens over listed equity funds. I note there that those sorts of green claims are coming under ever closer scrutiny. In fact, I just saw in the paper this morning, too late to clip it, put it into here. One of the Australian fund managers being fined for making fairly outlandish claims about the nature of their green fund when it was in fact invested into oil pipelines in Alaska. So the regulators are now increasingly looking at the sorts of claims that are being made, and I think we're going to see some significant pushback there. The other one is around, particularly in enviro markets, how to stack. This is a term that people throw around a bit, how to stack the outcome. So if you're doing a carbon farm, let's take that example in Western Australia. You've got the big operational cattle station. You're taking the cattle off part of it. You're putting a fence around it. You're letting the plants regrow. That clearly has a carbon aspect to it. But it also has a biodiversity aspect to it. Presumably, as the plants regrow, there will be a home there for birds and other species, and it has a biodiversity impact. So the question arises, well, can you generate both a carbon credit and a biodiversity credit and put the two essentially on top of each other and sell them both? Now, in the case of voluntary markets, it appears that you can, albeit that there's sometimes pushback about it. In terms of the regulatory markets, it's an ongoing area of some dispute as to what extent you should be able to do both things or be able to claim on both things. But I expect that to be another one of these very topical areas of policy development. So I had left a fair bit of time in today's lecture because I had assumed that we'd get a reasonable number of detailed questions about, well, what exactly is that number doing? So that's it. That's my last actual slide. So what I will do, I will cease sharing, and insofar as there are any questions at this point, I'd be more than happy to have them.
I don't see any question in the chat box, but I would like to invite anyone who have questions or you want to ask even something not in this lecture, but related to carbon credit or environmental finance, biodiversity, or if you would like to share what you are doing at the moment, because I think some of you might be interested in this area. Yes, if you want to say, you can just say.
We are extremely friendly here. We are happy to take conversations and thoughts.
Yeah, I think even for the carbon credit, for the land use, maybe there are a lot of questions, but maybe people don't know where to start actually.
Yes, well, I do understand that problem. It is a space where there's a great deal of detail, yes. So look, I think in that case, Sunarat, shall we take a wrap? And obviously happy to field questions that people wish to email later. Contact details are there. It's always a pleasure giving these lectures with the centre. So yeah, I might be clear at that point.
Yeah, there is one question. Because the person maybe didn't attend since the beginning or something, so he or she want to ask you to explain a bit more on the BOS credit.
Yes, so the BOS credit, this is the New South Wales Government Biodiversity Offset Scheme, BOS Biodiversity Offset Scheme. It was set up in 2016 off the back of a previously existing voluntary scheme. And I think, again, there's the interesting trajectory here. We see these things that start voluntary, and then government comes in and takes that framework and makes it somehow mandatory. So the genesis of that scheme was for dealing with people who were trying to clear land to do property development, which happens a lot, obviously, and how to manage the biodiversity impact of that. So the biggest single transaction in that market last year was on behalf of the Western Sydney Airport Consortium. So this is the consortium that is building the new airport in Western Sydney. Building an airport obviously involves clearing a lot of land. And so the way that had to work, and indeed the way any land clearing now works in New South Wales, is that the property owner who wishes to clear the land goes onto a government website, the BOS website. They mark onto a map the outline of the property that they wish to clear. The map uses a computer database of the various different sorts of habitat and animals that are in New South Wales, and it says, right, if you're clearing that bit of land, that's the home of koalas and ducks. And so if you're going to clear that land, you have to get from someone else their commitment to put a fence around a piece of land that protects koalas and ducks. And once you've done that and you've shown that you've got those credits, we will proceed to let you clear your land. That's the essence of how that BOS scheme works. So in the case of that syndication sanctuaries transaction, the piece of land that sits between the two national parks, they had identified that the sorts of things that would come to live on that land if they joined the two national parks happened to be the same sorts of things as Western Sydney Airport was clearing in order to build its airport. So again, that was very well done. Work on their part to identify that there was likely to be a demand for that particular sort of credit.
Okay, thank you very much. If there are no other questions or comments or remarks, I would like to conclude this webinar. So I would like to thanks again, Carl, for not only for this lecture, but all the 5 lectures that you gave. And so everyone can study again from the records that Kun Gulakan will send by email. And before you leave, could you please evaluate our webinar? We would like to know your satisfaction about the webinar, and as well as what kind of topics you would like us to organize. Yeah. And yeah, and if you have any questions, you can write email to our speaker, Dr. Karel Knowles, or you can also pass on the question via us, so we can send it to Dr. Karel Knowles. Okay, so I think that is all from me, and So thank you very much and hope to see you again in our next event. Thank you. Have a nice day.
Very much.
Bye bye.